Welcome back. Real estate investors, you need to hear this now. The old myth is gone. You need to pay attention to these new ways of investing and which will change your life forever. Let's dive in. My headline is Young Americans. No, not just young Americans are increasingly moving to rural markets. Rural regions will see a population spike. I would say a massive population boom, if you ask me. You can research this on your own to validate what I'm trying to say. But US Census Bureau, as well as other credible data sources, have this backup verifying data. Population growth in the past few years for young people and soon older people as well, they are moving into rural counties in certain parts of the US. The key question is choosing which small town to move or invest in for us risk investors who's trying to pull the trigger. Not only that, many of these small towns in certain strategic areas in the country, they're also doing well, beginning to do well with short-term rentals. Yes, rural investing also apply for short-term rentals, not just long-term rental methodology, which I will talk about momentarily. Again, you have to know the path of growth. What is the future of real estate investing so you could be in the forefront? You can get ahead of the curve. And that's what I've been doing for several decades in helping thousands of mindless investors to achieve exponential wealth for themselves and their family by using this type of methodology, which I'm about to show you. So you watch for the data, you watch for data center, watch for tech development that are spurring investments. The tech boom has also been a boom for rural America. Wow, how times have changed. So anyway, according to entrepreneur.com, booming tech corridors nationwide are transforming housing sectors. So follow my strategic strategies and you will be a happy camper financially for you and your family. So with that said, I'm going to share that with you. Another article by Entrepreneur Magazine. Tech giants are pouring billions into artificial intelligence data centers. Are we ready for the realistic shift that comes with it? That's right. If you want to be a savvy real estate investor, informed and educated investor, you follow this type of investment methodology. Get in front of the curve of the path of growth, which I've been doing it for decades with several markets for the past more than 20 years, and thousands of my students and my investors, as well as the members of my real estate investment network, has followed me to using this unique approach, which is amazing. All right. So the key takeaway from this is artificial intelligence data centers are becoming the new driving force behind real estate booms, replacing traditional factors like urban expansion. Land prices in emerging AI hubs are skyrocketing, with tech giants investing billions with a B in infrastructure, affecting both commercial and residential real estate investment markets. Furthermore, AL's safe data centers are creating new tech hubs. And I'm going to tell you one location where I'm investing and hundreds of my investors are following my coaching and guidance, and they're following my coattail. Land prices are surging in key regions. I know that there are several markets in the country that are experiencing this type of high-tech growth, but I'm going to go into an area where it is affordable. So mom and pop investors So you can buy low-level, entry-level homes. You can cash flow with 20 to 25% down payment. So I'm going to eliminate the other tech hubs, which investors should not do because you cannot cash flow. Because I know Northern Virginia is one of the high-tech areas, but the median price of homes there are like $500,000 to $700,000. So you cannot cash flow on this type of investments because the rent to value ratio that just does not make sense. However, Texas, already a business-friendly state, is seeing similar trends as artificial intelligence companies compete for real estate near power grids and fiber optic networks. That's right. Now I'm talking about Texas. Specifically, I'm talking about Dallas Metroplex, Dallas-Fort Worth Metroplex. Specifically, even more precisely, I'm talking about North Texas booming corridor. So bear with me, more to come. Here we go. So AI's energy demand is driving infrastructure expansion. States like Texas, Arizona, Nevada are part of the high-tech AI boom. But once again, Arizona and Nevada, the entry-level homes are already 400, 600, 800K. There's no way you can make the numbers work. In Texas, and I'm about to show you, you can invest in those new construction, entry-level, single-family residential investing homes for around $200,000 to $250,000, and where you can cash flow with 20 to 25% down payment very massively. And I'll give you more details momentarily. All right, Tess. So now you know. Now you're getting the details of it. AI data centers are fueling job growth and housing demand. That's what you want. You buy, you invest in rental property where there's housing demand, population growth, and job growth. And there's a shortage of homes, and a lot of people are renting. The rental market is very strong. So that is the fundamentals of real estate. That's what you want. That's how it is. Just a clear reminder, because people are migrating to these small town USA regions outside of the metro, outside of Dallas metro, where AI data centers and require high skilled professionals to maintain the operations. So this is leading to a surge in tech-driven job creation in regions that previously had little exposure to AI industry. So AI's land grab will reshape commercial and residential investing for a long time to come. In Texas, for example, the areas surrounding the OpenAI's Stargate projects would certainly experience increasing interest from developers looking to build housing, business parks, and commercial districts. And so Texas is the Silicon Valley of the South. North Texas specifically is the financial hub, is Wall Street 2.0, and is a high-tech hub, suburban, small-town high-tech hub of the Metroplex of Dallas. Listen up, real estate investors, especially those who anticipate these changes early, get in early, will be able to capitalize on one of the most significant real estate transformations of this decade and beyond several decades. So this article from the Entrepreneur magazine, final thoughts, are you ready for the high-tech land grab, especially in Texas, because it's affordable? That is the key. There are other high-tech hubs in Silicon Valley, where I live, in San Francisco, where the median price of a home is $1.5 million to $2 million. Or you can buy a single-family home there. You have to get a rent of $10,000 per month for you to cash flow. So not high-tech hubs in California or Seattle or New York City or Chicago or Miami or any of these expensive markets. That's not the idea. So the rise of AI data centers and manufacturing tech hub fueling the billion would be dollar realistic shift as companies scramble to secure land, energy, and infrastructure for the next generation of AI computing. For real estate investors like yourself, these represent massive opportunities, but only for those paying attention. AI isn't just revolutionizing technology, it's reshaping cities and suburbs and real estate investors such as yourself. So pay attention, get in the path of growth before the rest of the national mainstream media get a hold of this unique tech boom, financial boom that are occurring in North Texas. Let me show you some more information. So more specifics, here we go. Again, so my interpretation of all this great information that you have heard me so far is that real estate is an absolute gold mine right now. It's funny, all the doom and gloom, the world's coming to an end, everything else out there, we're talking inflation, stagflation, recession, housing, the doomers talking about housing crash, and we talk about the tariff and the deportation of immigrants and all the government layoff, all these negative news, or make it a narrative that is a bad time to invest in real estate. You couldn't be further from the truth. So stay away from this very, very misleading, very inaccurate doom and doomers out there. They are preaching negativity out there. So you got to be smarter than that. You got to get the real data. You have to do the proper research and due diligence. And believe me, 2025 and beyond, you get in early, you buy in a specific market. Real estate is about local market. There's no such thing as a national real estate market. So if you do the research correctly, if you know how to invest in a specific areas, in a localized area, and then like you're learning right now from me, then you are in a tremendous, you can have a tremendous opportunity to pull the trigger and invest for the long term. And I will show you even more great details. All right. So here we go. Like I said, I've been doing this for many decades. So I'm not going to go over all the small outlines here. You can pause the slideshow and read up on it. So I will, because I have more to share. So it's all about job growth, population growth, get in front of the curve, buy in a landlord-friendly state. When there's a supply and demand imbalance, good rental market, good quality lifestyle, buy new construction, all this infrastructure growth here, and you have to get in early. Buying at the beginning of the growth before home prices skyrocket. And this is what's going to happen. It's happening. Home prices will skyrocket in this specific neck of the woods, if you will, North Texas. Not only that, the Wall Street Journal says NASDAQ plans to get a second headquarters in Texas, in Dallas, Fort Worth. So we're talking Wall Street of the South. Wall Street 2.0 is coming into Dallas, Fort Worth Metroplex, and North Texas is going to be the recipient of this massive growth that's happening. So get in early, buy this very inexpensive new construction starter homes with low affordability, affordable homes. That's the key for cash flow and long-term growth. And again, see, that's what's happening. In fact, it is the Wall Street of the South, Dallas, is going to be Wall Street. Did I say it? Instead of Wall Street, it's Wall Street. That's what's happening with Texas with respect to the financial hub and Wall Street 2.0 and the second headquarters. So Lone Star State, Texas, is becoming a financial hub of the U.S. right next to New York City's Wall Street. Isn't it amazing? Of course, Wall Street, Texas, burgeoning financial hub, according to the Wall Street Journal. So everybody, all the wealthy people, Donald Trump and his buddy Elon Musk is a proponent of Texas, and a lot of high-tech moguls are already entrenched in the Texas economy as we speak. Wow, there's so much. Goldman Sachs have their duties. Actually, no. JP Morgan Chase already have 31,000 employees in Texas, more than in the state of New York. That's absolutely mind-boggling. All the sprawling landscape illustrates an expansion that has brought North Texas a presence in financial services that now sits second only to New York City in the U.S. And the growth of the Wall Street is accelerating. Wall Street 2.0, Wall Street, which is second to Wall Street. Now you know what's going on. So invest where there are growth, and your real estate portfolio will grow beyond your imagination. But you have to do it long term. This is not a get quick rich scheme. Maybe perhaps a get rich quick 7-year scheme. Is that even a better term? All right. Let's continue. Again, I'm going to go over this data very quickly. Dallas Metroplex right now already have 8 million people, tremendous amount of job creation. It's not only high tech, it's not only financial hub. We're talking manufacturing, hospitality, healthcare, construction, people migrating here. There's a lot of rental trends. People need to rent from you. A lot of upcoming projects. I'm not going to even begin to talk about it. You read about it on this slideshow. You can pause the slideshow, as I said earlier, and also you can do some further research. And this data, when you do your appropriate research and due diligence, the data that will coming to you is abundant, is absolutely overwhelming in a very good way. So you got to have the commitment, the desire to take action. And I'll show you even more specifics of your strategies. The migration, the economy of Texas, North Texas. Texas have more Fortune 500 companies in the country than anywhere else in the country. And it's the fastest growing states in the country. And what more can you ask for? And just in about next couple of decades, Texas will, this data is absolutely mind-boggling. In about a couple of decades, Texas will exceed California in terms of economic growth, in terms of total population. That is absolutely mind-boggling, incredible. But get in early and reap the financial benefits of being a real estate owner, real estate investor. This is incredible. But wait, there's more. Again, in North Texas, this is just beyond belief. This is too good to be true, because you have the ability to buy new constructions, single-family home, duplex, maybe even fourplex, affordable growth markets with low interest rate mortgage financing, way below the current mortgage rate of 6.5% to 7% out there, right, on the mortgage rate. And so you can cash flow. You can cash flow with 20 to 25% down. But regardless of where you live in the country, you can buy, and we have the markets available. We have the teams available to help you buy these kind of properties. You buy long distance, but you buy remote, you buy turnkey, new builds, cash flow rentals. And this is some of the top markets, small little towns in the suburbs, North Texas. And this small little town, this is rural towns, if you will, are absolutely you can see the data is growing by leaps and bounds, double, triple, quadruple in population growth in a very short few years. And already you're seeing historic appreciation in 2024 in North Texas, almost 5 to 10% in appreciation year over year, whereby the median home price in Grayson and Hunt County in North Texas is so low. We're talking from a very low bottom medium home prices. The numbers truly make sense. Again, Sherman, Texas, which is little small town with 45,000 people, which is 1 hour north of downtown Dallas, where you have this semiconductor boom. You're talking like Sherman's population could double in the next 5 to 10 years, and they can build 8,000 more new homes. Well, a small little city for only 45,000, landing 2 multi-billion-dollar high-tech companies projects with thousands of workers, high-tech workers, moving into this little small town 1 hour north of Dallas. It's just mind-boggling. The growth is beyond imagination, which is Texas. The name of the company is Texas Instruments and Global Tech. They're adding thousands of jobs starting this year, 2025. So people going to move in here. People going to move in here need a place to rent first. They can rent from you because you're the owner. And some will be able to buy. Some need to rent. It's a 50-50 ratio of owners versus renters in this number one fastest growing region of the country in 2025. And for the foreseeable future, the growth is decades in the making. Housing shortage, right? When there's a housing shortage, it'll put upward pressures of homes. And this is what's happening in North Texas. There's an acute housing shortage. The builders they just not equipped to build enough homes to accommodate the population growth and the job growth. As you can see, I'm not going to go over the data. You can look at the data yourself. I'm going to get to the real good, juicy parts of this presentation. So thank you for your continual attention to this video. Again, all this high occupancy, high rental rate increases in Texas, and this is the most current data in North Texas. According to the new Zillow report, the single-family home renters are paying more rent than multifamily rents. As you can see, the disparity between multi-unit rentals, $1,820 average rent, versus single-family homes at $2,179. That's right, single-family home investment is the way to go for you guys watching my video. This is it. This is what's going on. We are seeing increasing rent, so potentially increasing cash flow. That's a foundation of a real estate portfolio construction. Then the rest of the profit will come from appreciation growth over time, tax benefits, and your renter can pay down your loan and use the power of leverage, the power of a 30-year fixed rate mortgage. That is multiple ways to make money when you buy an income property. So DFW, which is Dallas, Fort Worth, dominates the Texas in million-dollar homes. Of course, we're not buying million-dollar homes. We're buying entry-level homes. That's how you cash flow. That's how you build your wealth. But just so you know, there's a lot of money are coming into North Texas, this is just a tip of the iceberg. And of course, as we know, over the last 10 or so years, we have seen increasing home values, especially during the pandemic housing boom, where the skyrocketing home prices and elevated mortgage rate has caused the lowest affordability of home buyers in the history in the past 30 to 40 years. So there are less and less people able to afford to buy a home because what's the income that are necessary to afford a median price of a home in the U.S.? A median price of $400,000 home in the U.S. is around $114,000. You need about $114,000 annual salary in order to afford to buy a medium size of a home due to the skyrocketing home prices during the pandemic housing boom and the elevated mortgage rate of 7 to 7.5%, especially for investors' rate if you don't have any kind of incentive to get the loan, which I will share with you how you can overcome that. So anyway, because we are in a renter's nation, 2025 and beyond is a renter's market. It's a renter's nation. There are more renters than ever before in the past 3 decades. And of course, renters are stuck renting for longer. So when you buy these great new construction homes I'm about to share with you, expect your renter is going to stay for 2 to 3 years at a time at a bare bone minimum. Plus, when you buy new construction, your maintenance cost is absolutely very low compared to a very old house in other part of the U.S. where you can subject to maintenance issues and vacancies and rehabs and all those kind of things when you buy old homes in most other part of the country. But you buy new construction where the builder will give you 1 year warranty, 5-year warranty and a 10-year warranty in case of any kind of maintenance issues. Anyway, so let me see what else. This is happening. Renters are really struggling. Renting is cheaper than buying, so we can have more renters than ever before. Another data shows that the growth of rural home values outpaced suburban and urban homes for the seventh consecutive year. Again, when you buy in the suburbs, when you buy in the exurb, you buy in a small town USA, that's where the passive growth is, not only in Texas, but everywhere else in the country as well. So watch the trends when you buy into the away from the metro. That's where values, that's where economic and real estate growth is occurring into way deep into the suburbs, 1 hour away from the major metros. So suburban housing growth is growing much faster than if you would buy more expensive homes in the urban areas. That's what's happening. I'm going to share with you some off-market listings that we have. We have a team of people on the ground here in North Texas that can help you buy this off-market homes that are ready to go, located in A-class locations in North Texas and with some A-class tenants, easy to rent for all the reasons I just stated. It's almost 1% rule. This single-family home in North Texas, you can buy right now for 4-bedroom, 2-bath for $259K and rent for $2,100 with the annual cash flow of almost $6,000, monthly like $500 something, net cash flow based on 30% down payment. So this property almost meet the 1% rule, which is absolutely amazing. And I'm going to show you the total ROI. This is a duplex, new construction in North Texas. Only $384, rents for $2,900 on both sides. If you put 30% down payment, you can cash flow like almost $1,000 per month. Monthly cash flow at an 8% cap rate and what have you. And this is my final pro forma. I'm breaking it down. This is a typical properties that's happening that we're offering. This is a duplex, like I said, brand new, $385K, rents for $2,800 on both sides. You put 30% down payment, out of pocket is $102,000. You minus all your debt obligations, expenses monthly net cash flow of $690. All right, so which give you a cash and cash return is of 8%, 0.7% rent to value ratio, and capitalization rate of 7.5%, which is a very good metrics. Almost $700 of monthly cash flow at 25% down payment. Actually, this is a duplex, brand new and a very good location. And this is imagine where else in the country, mere 1 hour away from my fastest growing metroplex in the country, Dallas. Only an hour north, where you can find a new construction single family home for less than $200,000. Nowhere else in the country you can do that. $190K for rent for $1,550. Monthly cash flow almost $700. This is absolutely amazing because you're getting because we have a builder incentive. You can buyers rate buy down. With builders rate buy down, you can get 5.875% 30-year fixed rate mortgage. And with the property management, they're gonna give you a free first-year property management for free. And then in some builder can even that we can give you some 2% closing cost reimbursement. So this is the numerical formulas. You need to digest this yourself. This formula is not rocket science. It's a 5th grade math. This is how you analyze a deal. This is how you underwrite any deal out there where the numbers make sense. And this is the important metrics which I use when I do the pro forma. But wait, there's more. Because this market is the potential for appreciation is so strong, it's better than anywhere else in the country. So if you have the motivation and you have the capital, if you have the dry powder to buy more than one rental property in this particular time, then this is the methodology. You have a 2 to 6 year old strategy. What does that mean? You buy one or more property at 20 to 25% down payment in this market, fast growth market. You hold for 2 to 6 years. Then either you sell the property, do the 1031 tax-deferred exchange. I'm not going to discuss that too much. We have other videos we have going. Better yet, based on 5 to 7%, maybe even 10% annual appreciation for the next 2 to 6 years. By this time of holding 2 to 6 years, you could have a loan to value. You could have a loan to value of like 50%, allow you to catch up refinance. When you do a catch up refinance, it's a tax-free event because you borrow against your own money. So when you catch up refinance from this high LTV, loan to value properties that you bought today, 2 to 6 years later, when you do a catch up refinance for $50,000 to $75,000, you can buy more property. You can buy 2 or 3 more cash flow properties, either in the same location or other part of the country in which we have properties available for you. So you just rinse and repeat the whole process for the next 10, 20, 30 years. Then you buy in the whole, you can, this kind of new construction property, it will last you for a long time. It's a generational wealth, really. When you buy older properties, at some point in time, the stress of maintaining older properties in other part of the country, you deal with tenant issues, low quality tenant issues, maintenance and upkeep and vacancies and all that. By buying a very cheap older properties in the Midwest somewhere, whatever, you can be a very stressful landlord. So you might quit, you might sell and never become an investor again. But when you buy new construction property, like I just showed you, it's very sustainable. You can hold it long term because the maintenance, the tenancy is the best, and the maintenance issues are so small, so little. You can hold it for a generation, and yet, have you heard of buy, refi, and die? It's a tax-free event. You basically pay no taxes. The only money you pay is a down payment to buy the initial property. And each time you refinance your property to buy more properties, it's a tax-free event. And then when we pass years and years and decades later, hopefully, then your beneficiaries will get a step up in basis at the date of death at market value, at fair market value. For all the decades and years of appreciation and equity growth on your real estate portfolio, when you pass, the beneficiaries will inherit the property at a step up in basis. Therefore, they pay no taxes in inheriting your properties. So if they, after they inherit the property, upon your passing, if you will, I hate to mention this, but if they sell those property the next day, whatever, technically speaking, they pay no capital gains tax. So you buy, you cash out refi for the next 5, 10, 15, 20 years to buy multiple more properties and then hold it forever and achieve the cash flow, the passive income, the tax benefits, and live off the passive income later on, right? Down the road, and when you enjoy your life and you expire, for example, your loved ones will inherit the property at a step-up basis, and they pay no capital gains taxes when they inherit the property. Talking about generational wealth building, which is the rich practice these kind of strategies, and the super wealthy out there. You don't have to be super wealthy. You can come from any financial background, and if you do this kind of a strategy long term and stay the course and survive and thrive, and you gonna create some not only generational wealth. If you teach your children and grandchildren the value of money and preservation of wealth, is a multi-generational wealth building. When you buy this new construction cash flow properties in the fast growth markets in the country, and you do rinse and repeat. You do cash out refinance, hold it long term, never sell the property, and enjoy the amazing passive income lifestyle where you can live a life under your own term. That's the key to wealth building. And this is a nice numerical formula. I'm not going to explain this. You can pause this slideshow to look at the number, to calculate the way we do things. This is a blueprint. It's like Albert Einstein School of Real Estate Investing. And yet, you don't have to be Albert Einstein. This is this is not rocket science. The formula I just show you, just digest it. Just do a deep dive and calculate these numbers, and then you can achieve. This is the investment methodology that I've used for decades, and many of our students, our investors, and our members of my network have used this kind of formulas for years, for a long time. Again, the power of this investing You buy this cookie cutter entry-level homes in the fast growth markets. In not just Dallas, Texas, we have other markets that are doing very well. Also, like in Oklahoma, in Alabama, in Florida, in Tennessee, and Buffalo, New York, we have this type of properties available. And that's how you leverage. That's how you scale your portfolio. You need to have an empire mindset. You need to think like an emperor. Not all of you want to buy 100 properties, although technically you can do it. If you have a 15, 20-year investment horizon, you can scale up to 100 properties. But most of you can buy 1 to 3 to 4 to 5 properties in your lifetime. That's fine. That's better than zero. But you have to, again, there's no limitation. There's no limits as to how far you can carry your wealth the way I teach you how to do it. At the end of the day, here's the best part. Here's the icing on the cake. In the end, because you're using professional property management, you're using turnkey approach that I've been teaching you, doesn't matter. If you own 1 rental, 5 rental, 10 rental or more, at the end of the day, all you need is spend 1 to 2 hours per month, not per day, not per week, in managing your real estate portfolio. Why? Because you have a team of people you can delegate, you can outsource your team in the local market. It doesn't have to, again, we have other markets in other areas in Texas and in Alabama, in Florida, but that's it. You work as a team and you are a passive investor. Look, real estate is a long-term game. Over the past 100 years, property continue to go up in value, except this slight dip in the housing crash back in 2006 to 2008. With this few minor exception, long-term investing, passive investing, the way I do it, is an amazing way to live your life under your own terms, and you can free up a lot of time to do the things you want to do in life. You don't need to be a manager of property full time. That's not necessary at all. It's almost passive investing, So Warren Buffett, the great Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. At the end of the day, like some of you need some mentoring, coaching help, you can contact me as well. And so to get more information on these great methodologies, other than that, so thank you for attending. And if you received any value whatsoever from this, please like and subscribe to my YouTube channel. And also, you can put your email into my website below so you can become a free member of our investment network. And then you can receive in your email inbox on a weekly basis, you'll receive free content, information about the information I just shared with you, as well as other free real estate education that you can take advantage of. Thank you so much for watching. I'll see you on the other side. Have a nice day. Bye-bye.